Happy Monday, ladies and gentlemen. Welcome in to the show, all you trader nerds. Hope everybody had a fabulous, fabulous weekend. Beth and I have been happily married for 17 years. And yesterday we celebrated our 23rd wedding anniversary. So Beth hates when I do that joke. I just won't tell you which 17 years were the were the happy years. We all have our ups and downs, baby. It's been a struggle, and I don't know how Beth has made it that long with me, but we have survived. So we had a great day. Went to Shoney's. For those of y'all don't know what Shoney's is, that's a little restaurant where they got the best little breakfast bar on the planet. And so to go there, we had to go to Gadsden, freaking Alabama, to see the Shoney's Fair and have a good time. So we loaded my mama up. My mama went. We all went. We just had a great time. And then we went and saw some leaves. We played in the park. We just had a great time yesterday. Really good. Now, Friday, Beth says, Bobby, you need to take the whole day with me for a date day. So we may not even have a session this Friday, y'all. Ed may be leading the session on Friday, if Ed's available. Ed and Rick. Wouldn't that be cool? Ed, Rick, I don't know. Whoever wants to lead a session on Friday, that'd be great. Because I think Beth has already put her little clause in and said, Bobby, you gonna spend the day with me? So I don't mind doing that.
We'll have to have a moderator rap session on that one, Bobby.
Okay, that'd be good. Gonna do a moderator rap session? Anybody that can do it, that'd be great. I'll set the link up for y'all and y'all just hit the start button and roll on. And then I'll say, Beth, I'm gonna listen to she. No, you're not listening to that. I'm here now. I thought, Beth, listen, I was on the phone with Ed the other day, and his wife was saying credit spreads and debit spreads, and she knows all the lingo. And Beth's like, I don't care nothing about that. I'm like, Beth don't care nothing about debit spreads and credit spreads. All right, so let's see how this is. Oh, behave. I wanted to play the Jeffersons today. 35, 983.08, 983.08. Yeah.
Hey, Bobby, your date is incorrect. Today's the 24th.
Oh, thank you. Listen, I'll tell you what. I mean, I don't know how Rick does say it. I mean, honest to God, what is that called? You are.
It's called being anal.
Well, you have an attention to detail that's, uncanny. It's just really good. Really good. So, and I appreciate it. I really do.
I'd call it detail specific.
Yeah, he's detail specific. Hey, we need to let him take that little kingdom thing that Candy's making us do.
Yeah, you ought to post a link on for everyone to do that.
Yeah. Hey, if you post it in the chat, it's called kingdomality.com. Sure. That'd be great to see what everybody is, right? Me and Ed are white knights. My wife is white knight. My mama
white knight. We're white knights.
Yeah, my mama is a shepherd. Candy, who has been teaching this to us, she's a black knight. That's just kind of cool to see different personality traits. All right, so what are we doing now? Oh, I'm gonna do my Greeks and ratios from the I guess I could show y'all this. I don't guess y'all mind seeing these. All right, let's close this thing. All right, so let's see what our deltas are. Look at this, y'all. We have negative deltas. Oh, behave. Negative 16. How's it even possible when you're doing a trade that has positive deltas? That's the power of those put delta spreads. So negative 16. Let's go right here. Look at this, y'all. Negative 16. So our theta. This is your first day. You're going, what the crap is theta? I'm the same way, baby. It took me a long time to figure all this crap out. 44. Look at that. 44. So we are at 0.12. We want to be at 0.1 or higher. We can be as high as 0.3. Now, I started to do a thing. What is the VIX, y'all? Well, what is the VIX? The VIX is 30 again, probably. All right. So we think VIX is around 30. So I could be as high as 0.4. Now, I started to, Ed has put the personality thing on there. It'd be fun for y'all to do. It'd be good if we all did. See what y'all are. It's only 8 questions, y'all. So y'all sitting there going, I have not taken a test. It's 8 questions. Take you 5 minutes. So I started to change the spreadsheet up to go, you know what? If we can go to max theta, our minimum theta instead of 0.1 ought to be 0.2. And then I thought, no, I'm not gonna change it because some of y'all are risk averse and y'all want to do the least risk possible and you just want to keep it above 0.1. So I don't want to force y'all to be at 0.2. But you see, as risk, as volatility goes up, you and I can take more risk. So if in your head you want to go, well, if it's 0.4, step 2 steps down, I need to be a minimum of 0.2. But if you're risk averse, you can say I'm gonna be 0.1. Everybody see how you could work that without me changing the spreadsheet? So I don't want to force you into taking more risks than you're comfortable with. We just want to keep above 0.1 to make sure we have some type of return, right? At the end of the year, we want to be able to collect some of that data as profits. All right, so our, what do you call, buying pair? Bobby, go to the right. I hate taking my medicines today. I apologize. 7837.50. 7837.50. God, what happened over the weekend? Unbelievable. All my stuff is dropping. Now I'm only using 21%. I could use 40. So if you could use 40, maybe this needs to be 30. Right? That's my minimum. No, I don't want to do that to you. I don't want to do any of that. So everything looks good, y'all. This is screaming for a trade, isn't it? Do y'all see how this is screaming for a trade? Now, first of all, I hadn't even looked at tomorrow. Me and you ain't looked at nothing. I don't even care what the market's doing. I may not even look at it today. I just know that my account says, hey, Tubby, you need a trade, right? You're at the lower end of this. You could be as high as 0.4. Step it up, my man. Step it up. Okay, so let's do it. Let's do this trade. I'm trusting the process. So let's go into the micros. Let's just put us on a trade. All right, so here we go. Trade, we're going to table. We're going to 50. Is that actually the right number of days? Sometimes this thing don't work right. So 53 days, close to 60 without going over. I'm going to do a long put vertical 50 wire. It's the same thing every day. I don't know why y'all come back every day. We always do the same thing every day. But you know what? That's why the University of Alabama, that's why the University of Alabama is so successful with Nick Saban. So I'm going to share this with you as well. I went over this during Candy's coaching session this morning. I want y'all to read this. It's really good. Even if you hate Nick Saban, that's fine. But you can still learn from our enemies, right? About it's the process. Some of y'all are looking at your accounts and going, okay, I got to make 30% this year. But you're not focused on each 7-second play. They figured out, Alabama figured out that each play averages 7 seconds. Win the 7 seconds against your opponent. Don't worry about the play before or the play after. Win the 7-second play. So when I open up and my metrics say this, right? I'm looking over the defense. If I am the quarterback of my financial future, and I'm looking at the metrics, I don't care what the market is doing. I'm looking at the defense. The defense is saying, I'm looking them over and I go, okay, I need to put a ball in play. Y'all see that? So now I've got to have perfect execution in my play. So I'm going to do the same thing that I always do. And so that's why Alabama, they'll do the same play over and over until they win the 7-second play, right? So when we do this 7-second play, you better believe we're going to win this 7 seconds. That's how they do. You break up a whole game into a 7-second performance. So your 7-second performance is looking over the defense and deciding, do I need a trade? I decided I need a trade. So I'm going to mark that up 975 so we don't want to overlap strikes and we'll get food. I said, and we'll get $10, you stupid. No, I should have failed. What's crap? Because it was short. Guys, put that. All right, now in this high volatility period, we've been putting on 112. So we want to go down to where we can get about $10. But I'm a greedy son of a gun. So I'm gonna go over here where I'm gonna get a little more, about $29.50. That's good. So let's move it to that mid price. Right? Get 11.25, 11.25. Let's go up to 2 and sell 2 of them. Okay. So now my deltas are -14, going in the wrong direction. My theta's only up 75. Okay, Rome wasn't built today. Right? So I put on another trade. So that's good. That's all I can do. Now, could I put on 2 trades over here? 2 trades? I could, but that's not what I normally do over here. So let's look at, even though Nick Saban says, don't look at the scoreboard. Don't look at your profit and loss, okay? But we need our profit and loss, our net lick, in order to figure out what our metrics are. So we kind of got to look at the scoreboard every now and then, but look at the play. And then look and see, what have we created? Our team on the field kind of looks like this, y'all. Our team on the field looks like this. And oh, ain't she pretty? Let's zoom out. And what we are creating is this humongous profit 10 to the downside. Call it a camel, call it a whale, call it whatever you want to, but it is gorgeous, right? We see the whale, eyeball, right? This is our beautiful whale of the downside, and she is quite a beauty. So we see all these components. Now, if you were trading a portfolio, see, this would freak some of y'all out. You go, oh my gosh, Bobby, how do you manage it? Let me show you how I've been managing it in this account, because you'll like this. You'll like it. Here's what I've been doing. I've been looking at my positions. And I go, okay, when do these expire? Okay, they expire 7 days. All right. I hadn't even been looking at anything but these. And so I really hadn't done anything. And I'll go, do I need to take off deltas? If I do, I'll close one of these naked puts, right? If my deltas got too big or my theta's too big, but my deltas and thetas are not too big. And I've got that beautiful whale to the downside protecting me. So why would I even try to close anything? You know, let the metrics speak to you. We are in the cycle of ebb and flow of the market that tells us what to do with our metrics. And it's so sweet and so cool that we can just come in here and do our little thing. All right, so let's go to the second account, shall we? Let's do the Crimson account first. So the Crimson account, see what our net leaky is in here. Maybe now a little bit too. Net leaky in this one is 1024. It's almost Nick Saban's birthday. Nick Saban's birthday is on Halloween of all times. Love me some Nick Saban. Did not like me some Nick Saban when he was at that other school down the road where Ed lived. Didn't like him. All right, so our account over here is, come here, Bob. Where are you? Okay, I see you. 46.30. Y'all know what that means. Praise the Lord Jesus.
Well, we're moving on now. We're moving on up to the east side. To a deluxe apartment in the sky.
Yes, hallelujah. All right. So my deltas are 6.46. Is that crazy? You go, I'm putting on all these trades and my deltas are only 6.46. Unbelievable. All right, my theta is 35.32. And it's fine. What we said, VIX is 30 or so. So 0.13, my buying pair is 64.88. 64.88. All right, so 0.13, we're toward the bottom. Remember, I said if I really want to up my risk, since VIX is higher, I could go as high as, I could go as, say, my basement here is 0.2 instead of 0.1. Don't go over 0.4 regardless. Buying power looks really good. Probably to be safe, don't want to go over 40, but I could go to 30, right? Be, I think, relatively safe considering where we are with volatility. So this is screaming for a trade, y'all. It's just screaming. So let's go do a trade in the scale. Oh, woe is me. Let's do the trade button. Find us a trade. What the crap is this? All right, so we're going to go 53 days. And let me just pull up those same strikes that I had built over here, over to the side. The process. And that's hard as traders to not look at the scoreboard, right? The scoreboard. We want to worry about the scoreboard. Stop looking at the scoreboard. Look at, are you doing everything? Now, if we fail and we blow up our account because we followed the process, I'm still going to be like, you know what, Bobby, you followed the process. But I don't believe that the process is going to allow us to lose. Now, does that mean that we're not going to have losing trades? Oh, yeah, we're going to have losing trades, but we're going to have losing trades. You better believe it. But overall, these things are going to work out just fine. So I got to sell 2 of these, right? There you go. And then I'm going to do a put debit spread. 53 days, 2. And the put debit spread is 34.80, 34.30. Then we'll look at these trades, see how they look. 34.80, 34.30. 34.80. We'll buy him. Hold your control key down. And 34.30. That $10 debit. 975, $10. Come here, baby. Hit me with your best shot. I said hit me with your. $10.25, baby. Come on, feel me. There we go. We got the in for 10 for it. All right. So what I've been doing is putting those in the spreadsheet. So let's go over here. And I've been recording them here. You said, Bobby, I don't have this. Okay. I will release this to the Hello Ladies gang this week. It's already been released to the Muscadine Mafia, and it is coming to the, what do you call, Ninja Nerds. Okay, so this is NP7. Now, NP7 was the $29.50. I got 2 of those puppies. They're puts, put them naked, 53 days, 10, 24, 22. And we got filled for, what was it, 11 and a quarter, 11.50, what was it, quarter, field orders, 11 and a quarter, 11 and a quarter. Now, if you don't want to keep up with your metrics, you do not have to enter your trades. Those days are over. If you don't want to, don't do it. So this is a 1 trancher. We'll call this PDS 7. And we did the 34.80. You do not have to track your trades. If you don't worry about the metrics, don't worry about it. 34.30. Puts. Debit spread. 53 days. How did I get 58? Rick, you didn't catch it. 10, 24, 22, and 10 and a quarter. Okay. Beautiful. So let's go ahead, and I think I can put them in my groups. And again, I almost at the point, y'all, if you don't want to group them over here, you ain't got to do that either. Right? Yeah, JT said that. Yeah, good. Will you send out a notice when your spreadsheet is available? Yes, I'll do that. And then probably a couple of weeks more, it's coming to the Ninja Nerds. Yep. But this week, I plan to release to the Hello Ladies game. All right, so let's go put him, what would I say, this NP7 and NP. So we'll go all this naked put 7. Again, you don't want to group him, don't group him. You don't need to anymore. Because I'm going to show you a different management technique. And we'll go PDS 7. Because y'all, some of y'all get too many groups, right? And you go, oh my gosh, I can't keep up with this. That's fine. PDS 7. But for now, we got our training wheels on. We don't need to take them off yet. So why don't we now, why don't we do this? Let's go look at everything, right? And now it's easier to kind of look at stuff on our Analyze tab, just to see the kingdom that we're building. Got a little kingdom here. Isn't that pretty? So let's hide any simulations we might have in there. So this is our trade. This is the first expiration. You see, look at this. Oh, it's just beautiful. Oh, it's just beautiful. And the little pumpkin is just building up, building up. So you see this where it says all 4 series. This is my 4 different expirations, right? So if I want to look at the ones that are the closest expiration, isn't that gorgeous? Oh my gosh, that's just you know, we're not even in the trade hump, and we can go down. How many days to the expiration these have? These are, didn't show me there, does it? Let's see, let's go back over here. Let's go. These are 7 days. I only got 1 trade that's 7 days out. Isn't this cool? So you look at him and you go, how's that trade looking? Well, he looks real good. We could have a 5% down move in the market. We could have about a 9% down move in the market, and I'm gonna be at max profit. Gosh, pretty. All right, let's look at the second series, the next expiration down. See how he, oh, y'all. You see why we love this? Hey, market goes up, we don't care, we're making money. Market goes down, oh, we may take a little bit of pain, but look at this, y'all. The market can go down 12%. And as long as I got the buying power and I don't panic, I'm gonna be at max profit. Max profit of $613 share. Isn't that cool? Let's look at our third expiration now. Oh, it just gets prettier and prettier, y'all. Look at this. We can go 5% down and we ain't even down. We're still up $63. That's sweet. So what happens if we have a 12% crash in the market? Well, hoopy doo, because we're going to be at $1,400 at expiration. We actually want it to go down more than 12%. Come on, market, go down 20%. This ain't even funny, y'all. We got to quit this stuff. Look at this, y'all. I mean, look at Profit Mountain. I mean, I hate to, you know, it's not like I'm getting, you know, I know we may be playing, you know, Vanderbilt, but, you know, don't get, what are you doing? If you are crapping in my floor, God is my witness, Sadie, I will put you out. What are you doing? Why are you scratching my carpet? Now go downstairs. Unbelievable. That's not one of my kids, actually. That's one of my puppies. All right. So what are you looking at? Look how pretty that is. Isn't it great? Market goes down 5%. We don't care. Market goes down 12%. We don't care. Market goes down 20%. I mean, look at that, y'all. We're at max profit of $1,400. Now we're gonna take some pain on the short term. Right? Gonna take a little pain, but a 20% move down in the market doesn't even phase us. Look at that. I mean, are y'all not, how in the world do y'all not feel good about this? I just, you know, I'm not getting overconfident. We can lose money. We take risks, but you got to take risks to stay in the game. So this is just beautiful, just gorgeous. Let's go to the other account. Okay, the Bobby and Beth account. Who is this Beth? Let's see how we're doing over here. Hope we get to play the Jeffersons again. 10, 24, 20. Come on, give me some Jeffersons. 1, 2, 3. We are at 493.07. I feel it coming up, baby. Yes, indeed.
Well, we're moving on now, to the side, to a deluxe apartment in the sky.
All right, so we're 886 here. We're moving on up. Fade up. I was watching George Jefferson last night dance. And I mean, that guy could dance. He was dancing on the show, and I was like, man, dude had the moves. I liked him. 80, what was it, 81.47 or so? Oh, man, hey. Is that right? Oh, Bobby. How are you letting it get into the blue, young man? Blue means cool. I've been cool for so long. You gotta step it up. Take some risk. Our buying power over here is 19,536. Again, I haven't looked at the market at all yet. I don't even know what's doing. All I know is I'm under allocated. I could be 40, I'm at 18. I could be at 310, I'm at 886. I could be 0.4, but I ain't even 0.1. Old Big Bobby has got to do something. You know what Big Bobby's got to do? Big Bobby's got to take some risk. So I'm gonna go back to the other account. Go to the Crimson account, and I'm gonna steal this order. Right? I'm gonna steal this play. I'm gonna do the same thing over here. I'm gonna create a duplicate order, and I'm gonna go take it back to the Bobby Beth account. And then I'm going to up my tranches to 2. Let's see if this thing's still going for 10 and a quarter. 975, see if I can get in at 10. Beautiful. Come on, Bob. Get it, baby. Get it. There we go. That's what I'm talking about. And then let's see, we're going to sell the 29.50. $29.50 twice. Yep, there, huh? And let's go up to the mid price. 11, and we're gonna do 4 of these puppies. Right, which is 2 tranches basically. 4 of those, $11. Let's get that. There we go. Beautiful. 11 and 10. 11 and 10. So let me put that in my little spreadsheet. 11 and 10. I like it. Let's go do this. And then we'll look at we'll go to the Analyze tab. Stacy said the other day she needs a little bit more help with the Analyze tab. So hey, that's what we'll do, man. So let's go put in our naked one first. So we got MES. We did 4 of those puppies. So we'll call that NP11. And he was the $29.50. Puts naked 53, 24, 22. And we got him for 11. All right, let's go put in our MES here. What the heck? What the devil? We did 2 tranches of that. I'm calling him PDS 11. And 3480, 3430 puts. And this is going to be great for y'all that don't like tracking stuff. Y'all ain't going to be, you don't have to do all this stuff. Just fast forward. Put this in quickly. All right. There she goes. All right. So now we got NP11 and PDS 11. Let me go group them real quick line. Then we'll go to the Analyze tab. PDS 11, NP 11. Let's go get them. Move to group. Group. Naked put 11, PDS 11. Now, someone on YouTube said, Bobby, it's killing me seeing you having these big profits and not taking these trades off. I got it. I got it. It's killing me too. I'm trying not to look at it. I'm trying just to ignore it. But you know, when you go through here and you see some of these profits, you go, oh my gosh, 200, hello ladies, 112, 93, 400% winner, y'all. You know, 7 days to go. You greedy son of a gun. Why are you not closing that? Now, Ed had an interesting idea. All right, let's just bring it up. Ed said, you know what, Bobby, that's at 90% profit. You know, why take the risk? Why take the risk of that 34.50 being there? Ed said, why don't you take this off? You know, you greedy SOB, take this trade off and then put something out closer to 60 days. You could do that. You absolutely could do that. So when I look at that 34.50 with 7 days out, let's look at him. Let's see where he is. Let's look at all my 7 day stuff here. Here's my 7 day stuff. You know, am I taking too much risk by leaving naked puts on there? You know, I got a 1% probability of that being in the money. 1%. 2% probability of that being in the money. 4% probability of it getting tested. Let's see what this is. I got a 6%, 7% probability of this being tested. 3% probability of being in the money. I don't know. It looked pretty safe to me. Plus, I got this humongous wall up here, right? I got this wall of stuff here that is protecting it to the downside. So, yeah, if it makes you feel better, close it. Take the risk off, put another one on. All right, Gage says, how many participants have been able to download the spreadsheet and use a PC with a Windows 10 and use Microsoft Excel program and not Google Spreadsheets or the Microsoft One online version? Yeah, someone answered Gage. I think I've even got people with Macs using it now. So what I did on Mac is I shared a Google Sheet with them, and then they took the Google Sheet and downloaded it and were able to open it on the Mac. So I think we've got it all figured out for everybody. So let's go to the Analyze tab, y'all, and let's look at High Simulations 4 Series, single symbol, all group. Here's our first expiration, y'all. Are y'all concerned about anything? This is the first expiration, or one expiration, shows what it's going to be like in 7 days. So we're at 1405. If we go down a little bit, we're going to make $1,900 compared to 1961 here, 1909 there for 5% move down. Now, this is all my positions, right? So let's look at my first trade, everything I got in the 7-day span. Here's what the 7-day looks like. And this is why I'm not really concerned. Now, 5% down move in the market, well, that's nothing. 12% down move in the market, yeah, you got some losses, right? We get a 12% move down. So I definitely could take out, so let's say that here's my lowest put, right? Let's see what. Here's my lowest put is my 34.40. I got a 34.50. I got a 3,500. And then we got to put debit spread. So I got 3 naked components here, right? So you could say, what happens if I take this one off? Just lifts everything up, doesn't it? No, it doesn't lift it up. Let's see what it does. Well, it takes the profits off. So 5% down move, I can make 1,023. Take that off. You make 923 because you're taking that off and taking the profits from it. Hey, you could take that off. Let's see what everything looks like here. Price slices. I've still got $17 of theta per day on that particular trade. Now, what you could do, say, how much theta am I getting from that one trade? So I could do this. So I said I could do this. Take all these off, right? You kind of evaluate them like this, yeah. Make sure we got everything. What's still checked? Let's still check, Bob. I thought we got everything off. Oh. All right, so I got a 34.30. So you got 34.30. That's what 34.30 looks like. That naked. Let's see what that naked one looks like. 34.30. It's got theta 339. Taking $1,900 of buying power. You could look at the other one. What about all 3 of them together? Let's see that one. Let's look at this one. That's those 2 together. That's another naked. That's another naked. Okay, so here's all my naked stuff that's unprotected. So, we're up 393. Yeah, I mean, looks like we can make 427. We don't have a lot of, and that's what Ed was saying. Ed was saying, Bobby, you've squeezed the lemon. You've taken all the juice out of him. You need to take him off. Okay, I see that. However, I can withstand a 5% down move without taking him off. All right. Now I'll be down $20 today, but still I'm going to be at 427. And then I can take down another, what? This is 12. So that's probably between 5 and 12, 7, 8% is my break even. Are we going to go down 8% in the next 7 days? Are you comfortable with that risk? So I understand exactly what Ed is saying. Take it off, Bobby. Don't worry about it. Blah, 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 blah. And then reestablish the position. So if that makes you feel comfortable, Ed, the more I think about it, yeah, if that's what you want to do, take it off. But then replace that theta, right? Replace that theta of $13.04 on those 3 trades by putting it out in time. So how would we replace that? Okay, let's say we do what Ed wants to do. Let's go through the analysis. You want to do some analyzing, which always scares me when I'm doing analyzing because I'm not too good at it. So I'm actually like exposing myself to y'all, but let's do it. So here's my naked 4 puts, right? I got 1, 2, 3, 4, 5, 6. I got naked puts here, and everything else should be a spread. Right? 32.90, 30. I don't know if they are a spread or not. Maybe that's not all my nakeds. Hold on a second. Let me see. Where are my nakeds? Anyway, let's just pretend we're going to take these particular ones off. All right. So let's replace $13 in theta. Because it's not important for me to identify the nakeds. It's important to show you the analysis. So how would I do? I got to get me $13 in theta to replace them, make them safer. So I got this. So I would go to 53 days. And I would go, okay, well, I'm going to sell me something. So if I'm taking those, how many of them off I was going to take off? I was going to take off 1, 2, 3, 4, 5, 6. That's the ones we were now analyzing, 6. So if I go over here, I put them about the same place, that's where I'm comfortable with, right? I could put off 6 over here. Let's say we're gonna do these 2960s, right? And let's just see what, if we added the same number of contracts, what would happen? It's kind of cool analysis, isn't it? So we do 6 of these, and let's analyze trade. Analyze trade. So we're gonna hide positions where it just shows that one trade. Let's make sure. Yeah, let's delete that. All right, so there is the trade, right? If we were to add 6. All right, so what does that do? It replaces the theta. It replaces the theta that we just took off. So kind of like that, except one of the things that Candy, who some of y'all may not know, but I'm working with Candy. Candy was saying to Ed the other day, yeah, but Ed, you know, then you're going to have some unprotected puts that are not going to have put debit spreads in that same expiration if we go out 53. So in other words, you're not building your little fortress out there. So what you could do is say, okay, I'm going to replace the theta by doing this particular trade, and then I'm going to buy a couple of more put debit spreads out in that expiration. Yeah, you could do that. You know, I just don't want y'all to get too, you know, no need to get too fancy with it. Ed, you got any questions about this?
Yeah.
That's a cool analysis,
Yeah,
though. Isn't it? That's
I
cool.
do have some comments. So
Yeah.
what I was looking at specifically is when I have naked puts tied to a naked put tied to a 111,
Mhm.
2 naked puts tied to a 112. And look, the other day I didn't realize it until the end. I realized I was messing with a BA 112. It doesn't really matter to me because when the premium gets down there under that $2 range, under the $1.50 range, and I'm not looking at taking off 6 contracts like you were just showing and putting on 6 new fresh contracts, because that's way too much one in one swipe. It's too much theta capture
Mhm.
and too much risk. What I'm talking about doing is like, and what I did Friday after, I think it was Friday after the close when we were talking after the show, is I did take off those 2 $1.40 naked puts that were tied to my BA 112.
Mhm.
The BA 112 expires in 28 days. I don't know what it is now, I guess 26 or 25. And I add, so that's $2.80 of ES points, which is $140. So I paid $140 to take off the 2 naked put contracts, which although they're way down at the negative, the 2600 level, if I remember correctly, I'm not looking at it, way far away, they still have some blow up risk. And the way I'm looking at this is for $140, I can take off those 2 contracts and roll into 1 new naked put. And I like you going out to that 50-something day frame. And I can either just sell a naked put by itself, which is where people get a little fuzzy, but I'll go into some detail in there and then you can take that and run with it with your thoughts, because I'd like to hear those. And so I took $2.80 of ES points off and I sold a $10.50 single naked put. Now it is exposed. I do have 1 other contract in that time frame. It's a 112. So I do have this extra naked put that is not covered by a put debit spread. However, I have 8 other put debit spreads tied to naked puts in some way, shape, or form, either 111, 112, stretched 111, etc. So I have all that put debit spread foundation that's building every day. And then when we have a pullback, I'll add a 111 to that single naked put, making it a 112, and solidify the portfolio that way. The other thing I could do is if enough time goes by and we don't have a pullback, I could go out another expiration if one has crept into that 60-day period, which it probably will have by then because this is ES. and just do a fresh 111. And then I have the 111 behind that naked put, which could almost be intuitively viewed as a 112, if you will, because it's still pretty far out in time. Without digging too deep into that, I want to just tell people what I'm thinking, because it's not me taking off 6 contracts or 2 contracts and putting 2 new ones on. It's replacing the 3 remaining points of ES premium, 2.8. It was $1.40 times 2, 2.8 ES points, with something else. And I got almost 8 extra points and I have 1 contract instead of the 2. So I'm not expecting a massive pullback. I'm not fearful. I'm not worried. I'm building out the portfolio, and strategically, it looks like, in my mind, I'd rather have that 29, whatever, something I sold. It was a 29 something strike. I'd rather have the 1 strike and 8 net points of premium versus the 2 contracts that have 2.8 points. So more points, less notional value, less blow up risk. That's what I'm thinking. This is still a debate I'm having with myself and plenty of other people. Most people are not chiming in support of this. In my mind, it's because I'm working toward this total portfolio management concept, which you have been professing. And I like that. Again, it's where I've been going. And I'm looking at my put debit spread, my existing foundation of put debit spread between that me now and that naked put 50 something days from now. And I have a boatload of maturing put debit spread protection between now and then. So it does offer protection for the whole portfolio. So my portfolio was light on theta after the humongous run up we had late last week. So I'm looking at ways to add theta and not necessarily add a ton of notional risk. So this looked like a good switch out to me. I'm finished.
I mean, I can't fault you for that, Ed. I mean, I can't. I mean, you know, I tried to punch holes in it and stuff. I mean, I really can't. I just can't. So, yeah, I think that's fine. What I would do is, though, as we are developing our trade plans and all that, I would solidify it, right, so that you can make it mechanical in what you're going to do. I'm going to do this when X occurs. And you can certainly do that. You know how to do that.
Yeah, and just for that, you know, the trading plan that I had finished at the end of the mentorship included rolling a 111 into a 112 if needed, either by adjusting the single naked put to 2 naked puts as a defense mechanism. It also included taking off these naked puts when they hit what I put as a low level. I have not defined what a low level is. So I do need to define that. And so this is something I've been doing for months and months. Even before the mentorship, I was doing this type of thing. So it's not new to me. I did have some interaction with others over the weekend, like, you chasing the shiny object. I am not chasing the shiny object. This is already in my laminated trading plan. So I just haven't defined what low premium is or exactly how I would adjust it. So those details do need to put down, but it's not something I'm just pulling out of my pocket on a whim.
Yeah, good, Ed. I appreciate you contributing that today. Yeah, good. All right, and here's the thing, right? So we've got so many tools now that, you know, we just here's what we're looking at. I've got a trade that's overall, my one expiration here has 1670. My Vega is really nothing. Look at this, my Delta. I got negative deltas on it. It's basically saying, hey, we want the market to go down. We'll do better if the market goes down. And on my 7-day trades, you know, if we go down 5%, we're fine. If we go down 10%, 9-10%, we're good. We can go down probably 12%. No, not probably 10% here. And, you know, break even on this trade. And now, because of Ed bringing it up to me about the roll, we know what to do if my nakeds were to get tested. Don't we know how to do that? Didn't we show that we could roll it out in time without increasing our buying power? I mean, we showed that. So I really think that we're just Jim Dandy good on either way you want to do it. You know, do you want to take risk off the closer it gets to expiration? Fine. What we found, here's what I accidentally found. Here's what I accidentally discovered. Taking these little puppies to expiration is perfectly fine because our overall deltas, I don't know if y'all know this, all these trades that we put on are positive deltas. The overall deltas of our strategy is mute. So let's go back here. This is 1013 or so. I want y'all to see this is before when we were, this is back when we were taking stuff off. Remember we got 140%. Let's take it off. Oh, we got 200%. Let's take it. This is back when we were doing that. Look at my deltas. And then we were like, hey, wait a minute. We need to let these things go to expiration. Well, I want you to see what started happening to my deltas. Now I'm still putting on new trades, but look what has happened to my deltas. 36, 24, 18, 28. As you let those put debit spreads go to expiration, it's killing your delta, which is amazing. I mean, it really is. I mean, it's the effect that it's having on our delta is incredible. So it's almost like we don't have much directional risk. So that's why I'm willing, right? I'm willing to be the guinea pig. If Ed wants to close them, I close them, baby. Close them, reestablish. Do what you want.
I'm guinea pigging with you, Bobby, because
Yeah, Ed's guinea
I'm
pigging
not,
too.
I'm not closing the put debit spreads. And if you remember during the mentorship, I stopped closing my put debit spreads and just took off naked puts and let them build up. And then toward the, like a few weeks later, I'm like, too much of a waste of money. I'm not going to do it. I'm going to take off the put debit spreads and salvage whatever value is remaining and just roll that into a new trade, which is not without merit, but a lot of it depends on the market conditions, your perception of market conditions. And I don't want to go there and scare anyone and freak everyone out. I know you haven't looked at where the market is today, but this kind of goes into the throttle the Greeks up or down, depending on your perception of the market, where it is and where you think it might go. If you don't have one, follow the Greeks purely. But if you do have one and you want, in my mind, I want to match my Greeks to my market perception with a minimum, your stated minimums. And that's how I keep myself from getting too conservative. If my theta drops below the minimum, I need to slap myself a couple times and put some more risk on. And I'll hand it back off to you.
Okay. Yeah.
Oh, I'm sorry. One more thing, Bobby, because I got quite a lot of chatter on me taking these off. Again, it was like a 9-to-1, we hate it, we like it idea, feedback, which is fine. I put it out there, bring on the feedback. That's what I'm doing it for. The other commentary I got was a big frustration / confusion on your negative deltas, my negative deltas, how we were like kind of having a negative delta party. And I got a good bit of feedback on why do you want negative deltas? How are you going to make money? You're minimizing your exposure. We're in a longer term uptrend, that kind of thing. So I wanted to, if you have time now, if not, we can do it tomorrow because I know we're almost an hour in. If you could just briefly mention Vega, which I know you used to track and don't anymore, but it's right there in your portfolio. It's right in mine when I write my metrics down. So I do watch it. And I was trying to explain to a couple of these people that Vega, our negative Vega, means that the portfolio moves by that amount up or down with 1% move in the VIX. Like if the VIX goes from 30 to 31, the Vega amount, the account will go up or down by the amount of the Vega, assuming it's a negative Vega. It would go down by that amount, correct?
Yeah. So just on my first expiration,
I just wanted to throw out there that your Vega number also has a portfolio dollar movement connected to it.
Yep. So let's say that volatility goes up. Well, what happens to the market when volatility goes up? Usually, not always. Usually that means the market's going down.
Usually down, except on weird days like today where the VIX is up, even though the market is up, even though we're extremely choppy.
So what happens is our negative delta will offset our negative Vega, right? So if volatility goes up, 1%, these positions that I've got highlighted here will lose $10. But at the same time, if the market goes down, right, my negative deltas kick in to offset the loss from my negative vega. Everybody see that? Now, what's this? That says, hold on a second, I get portfolio beta weighted, so as you can see this, and then let me do this, SPY. Yeah, so my deltas on this position that I've got thing are actually around 11. So this is more. So if SPY goes down 1 point, how much profit do I make?
$10.
Yeah, I make $10, right? So at the same time as this goes up, or as the market goes down, volatility is going to increase. I'm going to lose my 10, let's say it goes up 1%, I'm gonna lose $10 here. So this kind of offsets loss. And that's just why the Sosnoff says, until recently, because he's kind of long delta now, because he thinks that we kind of made a bottom, at least short term, that he normally keeps negative delta to negative vega, right? And he does it in a 1-to-2 ratio, delta to negative vega. So let me show you this. Your little spreadsheets, y'all may not know this, but if you'll go to your Greeks and ratios page, old sweet Bobby has all kind of hidden stuff in here. What's this? I got delta to theta ratios. We got where we used to record vega. Let's see what we got here. We got, let's see, A, B, let's see, C here. Yeah, we got all kind of stuff in here, right? Where we were logging theta and vega and all kind of stuff, all kind of ratios, delta to vega ratios. So SPY weighted delta of 1 to a negative vega of 2. So that's how we did it, right? They wanted SPY to be -1 to a -2 vega. That was kind of their thing. So that's how they hedged their vega risk, was by keeping negative delta. I probably didn't describe that right, but do y'all understand what I'm saying? So we used to keep up with all that stuff. We don't keep up with it anymore. We even dropped vega. We don't even worry about it. But it is something to consider, since we are net short options. We are, we're negative vega. We just are. It's just the nature of the beast.
And that leaves your theta to burn when the negative delta offsets some, all. It's usually some of the theta. The closer you get those two to neutral, the more it just leaves your theta to burn by itself, independent of what the market does.
Yeah.
Is that right?
Yep, that's exactly right. And what we're trying to show y'all is, since we've gone to letting these things go in, you got to say, here we were not doing that. Look at our theta, or look at our deltas, 46, 42, 47, 43, 35, 20. And then all of a sudden, now I know the market's going up some, but it still has to do with us letting these put debit spreads go to, see what it's doing. We're getting a positive effect on our deltas by making us neutral to market. By letting those put debit spreads go to expiration. They're becoming beasts. The put debit spread is a monster the closer it gets to expiration, y'all. It's just a beautiful thing. And it's trimming our deltas now, giving us less directional risk. Isn't that beautiful? I mean, we got a good plan. I think this is great. Now, can you poke holes in it? Maybe. But I tell you, I don't know how we can do any better than what we're doing. We've been playing a lot of the Jeffersons lately. We've been playing a lot of the Jeffersons. And in the trading world, ain't nobody playing the Jeffersons. Have y'all noticed? I mean, people's just freaking out. And here we are playing the Jeffersons every day. And we don't even know what I don't even know if the market's up or down. I ain't even looked. Let's see. Okay, we up a bit. Man, well, doing great. All right, guys, great session. I'll see y'all tomorrow.